Hey, it's Edward Stevens with the Stevens Group at Reese Nichols. And if you're like a lot of people, you struggle renting a property. Maybe it's an apartment, maybe it's a townhome, maybe it's a house. You struggle with your landlord constantly raising the rent and it creating problems for you, financial problems for you and your family. Because your boss doesn't necessarily raise your rent every single time your landlord, or so your boss doesn't necessarily raise your income every time your landlord raises your rent. So what do you do? Is there a way out? Is there a way for you to get a stable monthly payment? In this video, what I want to do is share with you some of the tips that homeowners use to stabilize their monthly payment. Okay, and why it's easier to stabilize your monthly payment when you're a homeowner than when you rent. Okay, so obviously when you rent, you're subject to the terms of the lease, and the tenant, you as the tenant, probably every single time you renew, you're going to be faced with some kind of a negotiation, which you're probably going to lose. A negotiation with the landlord, where the landlord wants to raise your rent. Okay, so when you own a home, and you have a mortgage, let's assume you have a mortgage, you have the option when you get your mortgage to do either a fixed rate mortgage or a variable rate mortgage. Variable rate means your interest rate on your mortgage can change over time. If you opt for a fixed rate mortgage, then the principal interest sum that you pay every month to the bank doesn't change. Every month, the principal and interest that you pay on that loan does not change. So that creates a level of stability. That's the majority, usually. That's the majority of your monthly payment, is the principal and interest to the bank. Okay, so as long as you pick a fixed rate option on your loan, that adds a level of stability. Your insurance is something that will change when you own a home as well. When you rent, most likely you have a renter's insurance policy. When you own a home, you want not only to protect the things inside of the house, but you want to protect the structure itself. And so you'll have a more all-encompassing policy, a more expensive insurance policy. And that, especially recently, that insurance cost has gone up. So what do you do? Overall stable monthly payment. Well, your principal and interest, we talked about those are stable. Your insurance, if your insurance goes up, you can, number one, you can meet with your insurance agent and talk about modifying your plan. Maybe there's some things that you're over-insuring on your plan. Your insurance agent can guide you on that. Maybe there's some things that you need to take off of your plan to get your insurance costs back down, because you're going to be paying these insurance costs every month when you pay your mortgage. So you can meet with your insurance agent and see if they can trim the fat. You can change your deductible. So in the event of a claim, how much money is the insurance company going to take from you in order to process that claim? If you change the deductible, you make that number go up. Most of the time, your premium, the amount of monthly payment you're making to your insurance company, usually that goes down. So you can kind of play with your deductible and premium amount in order to keep your insurance payments low. Or obviously you can shop. There's not just one insurance company out there. So at renewal, you may want to take your policy over to 2 or 3 different insurance companies and see if they can beat that pricing in order to keep your monthly payment as stable as possible. Taxes. Taxes is typically the fourth and last thing that you're paying on a monthly basis when you pay your mortgage payment. Principal, interest to the bank, taxes, and insurance. I guess it would be insurance and taxes. Your taxes, everybody's taxes go up. Okay. So, how do we find a stable monthly payment as a homeowner when taxes seem to just be going up for everybody all the time, always? A couple things you can do. Number one is you can control what part of town you live in because not all tax rates are the same. Some parts of the Kansas City metro or some parts of whatever are vastly different than other parts. So when you're buying a home or even when you're shopping, when you're in the preliminary stages of shopping, keep an eye on tax rates of these different areas. Okay? But assuming that you picked an area that's got a reasonable amount of taxes, real estate taxes, you can do a couple other things. Check in with your real estate agent routinely, at least once a year, so that you can get an update on the value of your home. And you can use that value to talk to the county when the county does their valuation of what your home is worth and how much taxes they're going to levy on you. When the county needs to do an assessment every year of everybody's taxes, they're usually going to send out a letter, and it's going to tell you, the homeowner, that you can object to that valuation if you so choose. And you have like a certain amount of time to fight it, and you can submit data, and you can talk to the county about that. And there have been many people that I have spoken with that, upon researching what their home is worth, talking to their real estate agent, they were able to successfully convince the county to get their taxes back to where they were last year or to get their taxes lower. Okay? Because that's going to contribute to you having a stable monthly payment month after month, year after year. Maybe the taxes go up a lot, but then you fight them and then they go down a lot and they just end up with just a little bit of an increase. You have the ability to do that as a homeowner. You have leverage as a homeowner to be able to do that, especially if you have the data that your real estate agent provides. Because principal, interest, insurance, and taxes are the four things that are going to be making up your monthly payment. So if we can keep each one of those stable, then you're going to have an overall stable monthly payment. The other thing that you can do with taxes when it comes to real estate taxes is you can be careful about the types of improvements that you make to the property. There are some improvements to the property that the government, the city government, local government needs to know about, like when you're pulling permits, and there's some that they don't need to know about. Maybe it's superstition on my part. I feel like it's probably not, but major exterior upgrades to your home are going to be more of a trigger for you to get an increase in your property taxes than interior upgrades, especially interior upgrades that don't require permits being pulled, right? So if you're increasing the value of your home and it's very well known to those who may be driving by doing an assessment on what your home value is, if you do that, expect your taxes to go up. But if you decide what improvements you're going to do and you're going to do those improvements that are interior only for the most part, just giving you an example. You're not doing extravagant exterior. You're not adding outbuildings or exterior garages or detached garages or things like this. If you're not doing that, then you're less likely to have your real estate taxes increase, all other things being equal. The other thing that contributes to having a stable monthly payment as a homeowner is your taxes just differ widely. Now, I'm not a tax advisor. Talk to your CPA. But there are a lot of write-offs that you get as a homeowner, namely the interest that you pay when you pay the bank and your taxes, your real estate taxes that you pay. Those are two of the four things that make up your monthly payment. Two of those are tax write-offs. So that means every tax period, when you're filing your taxes, you're going to expect a larger return than renting, all other things being equal. And that's going to help with those repairs and things that may come up along the way as a homeowner, maintenance items and whatnot that you wouldn't normally experience. And we'll get into that in a second. When you're a pet owner, when you are a pet owner, you have to pay pet rent typically, and you do not have to do that as a homeowner. When you rent, usually the landlord's going to gouge you, and they're usually going to make you put a non-refundable pet deposit down, and then they're going to usually charge you a monthly rider, like on top of what your normal monthly rent is. If you own a home, you don't have to do that. Okay? So you don't have to worry about all those extra fees that come with owning a pet. And the last thing I guess I can talk about is repairs. Obviously when you own a home, you're going to have repairs. The big reason why a lot of people don't own a home is because they're afraid if something breaks, they're not going to have the money to fix it, or just the cost and the attention to it is just going to be too costly. The time is going to be too much. The mental energy is going to be too much. Air conditioner breaks, roof gets damaged, right? Basement floods, whatever. This is where, when you're talking to your real estate agent, you can have them kind of explain the importance of homeowner's insurance and a home warranty. And between homeowner's insurance and a home warranty and a really thorough home inspection and a good negotiation with the seller of the home, you should be covered. You should be covered. You should be able to go into this house eyes wide open, knowing what your problems are that you need to fix now. What are your, next 3-year problems, next 5-year problems, and your home inspector is going to be able to do that. And then your insurance company and your home warranty company can kick in when certain problems happen. And then negotiations hopefully took place with the seller via your real estate agent to get you credits that you can put toward things like an old furnace, right? Or a crack in the foundation, or a damaged roof, okay? Things that may start to make your life as a homeowner uncomfortable from a monthly payment standpoint. You can get on the right track and get your foot in the door as a homeowner doing it that way. If you have other questions about how to stabilize your monthly payment and get into home ownership, just shoot me a message. My name's Edward Stevens. Look forward to seeing you one day at the closing table.